All right, so imagine this, right? Um, you know how like you can kind of see footprints in the sand and you can tell which way somebody walked?
Yeah.
So get this, imagine being able to see those footprints, but it's like the smart money in the market. Like seeing where they're going before they even get there. That's kind of the big idea behind volume price analysis. And like today, we're going to really dive deep into this stuff.
Ah,
We're using this book by Anna Coulling. It's called The Complete Guide to Volume Price Analysis.
it's a good one. It's really about understanding how to like read the market,
Mm.
because like anybody can look at a stock price going up and be like, oh, demand must be higher than supply.
Right.
But volume is like, it tells you how much higher.
Yeah.
And it also tells you if that buying is like real or if it's just some kind of manipulation.
Oh, okay. So it adds like another layer of information
Yeah, yeah, it's context.
or context.
Okay, like price by itself, it only tells you part of the story.
Oh, gotcha.
But when you add volume to the mix, it's like you're suddenly seeing the whole picture.
So by the end of this deep dive, we're saying like people will be able to like spot those manipulations,
Boy.
see the real trends,
For sure.
and like use volume as like their secret weapon.
Exactly. It's like having this edge that most traders don't even realize exists.
Okay, I like that. I like that.
One of the coolest things Culling talks about is this idea that the market kind of whispers its intentions before it like shouts them out.
What?
Yeah. She uses the example of these dark pools. You ever heard of those?
Dark cool's
There are
not.
these like hidden trading venues where like the big institutions like the whales,
Okay.
they try to like hide their big trades so they don't move the market against themselves.
Sneaky.
Oh, it's totally, totally strategic.
Wow.
But the thing is, even though they're trying to be all stealthy, their volume, it leaves a trail.
Okay. So how do we like learn to read these whispers?
It's all about understanding volume, right? Coling says even though these big players are trying to be all sneaky, their volume, it's like trying to hide an elephant in a swimming pool.
We can't hide. Exactly.
So it's not just about like seeing big volume. It's about knowing what that volume means.
Yes. It's about understanding what that volume is telling us in relation to the price action.
Gotcha. Gotcha. So like taking it back old school, wasn't there like some old dudes who used to use this stuff?
Yeah.
Like way back in the day.
Oh, yeah. Killing talks about guys like Jesse Livermore and Richard Wyckoff.
Okay.
They were like legendary traders who made fortunes by reading the ticker tape that was like the original source of real-time price and volume data.
Oh, wow. So like before computers and all that.
Exactly. But the cool thing is, even though we have all these fancy charts now, the principles are the same. Those guys were masters at seeing the difference between what the price was saying and what the volume was actually revealing.
Like reading between the lines.
Exactly. They could see the footprints of the smart money before anyone else.
That's so cool. And I remember Cullen tells that story about Uncle Joe or something.
Yeah, well, come
Good one.
on.
He like
Yeah.
manipulates this whole widget market or something. It's brilliant. It's such a great way to understand how market manipulation actually works in the real world.
It felt very familiar.
Oh, yeah.
Yeah.
Well, Coling really dives into the role of market makers.
Yeah.
Those folks who are licensed to make sure there's enough liquidity in the market.
Mm-hmm.
They're not necessarily bad guys, but
Well, hold on now. You're saying they're not bad guys, but then they're going around doing this Uncle Joe stuff. Like, that doesn't sound so great.
Vicky, okay, their job is to make sure the market is flowing smoothly, but, and this is a big but, they're going to profit from their position.
Oh, I see. I see.
Think of them like expert chess players, always thinking a few steps ahead.
Okay.
They're playing the game, and volume, it gives us a glimpse into their strategy.
Ah. So it's like their poker tell.
Exactly.
Yeah.
Coling emphasizes that they can't hide their activity completely. The volume, it always tells the true story.
I like that. It's like the market's always talking, even when it's trying to be quiet.
Exactly. And to drive this point home, Culling shares this amazing story from Richard Ney, who, spent his career exposing all these shady market practices. Ney tells this story about how the specialist in telephone stock, this guy, actually manipulated the price on the day President Kennedy was assassinated, and he profited from the tragedy.
Ooh, that's dark.
Yeah.
But it makes sense, like in a messed up way. Like if there's chaos and people are panicking, it creates an opportunity.
Exactly, and that's the point. Culling is making any event, even a national tragedy, can be exploited.
So if these market makers are so good at hiding their moves, how can we, like the rest of us, even hope to compete?
That's where volume price analysis comes in. Culling introduces some really powerful concepts that help level the playing field. One of the most important is this idea of effort versus result.
Okay. Effort versus results. So, like, what does that even mean when we're talking about trading?
It means that a high volume should usually go hand in hand with a big price movement. When it doesn't, that's a red flag.
Hmm.
It's like, a car revving its engine but not going anywhere.
Right.
Something's not right.
Oh, okay. Okay. So if I'm seeing a stock going up like crazy, but the volume is super weak.
That's a sign that something fishy might be going on. It could be manipulation or could be a fake out, a move designed to trap inexperienced traders.
So how do we avoid falling for those traps? Like, how do we know when to trust the price action?
Well, Coulling highlights a couple of other really important concepts: buying and selling climaxes and congestion phases. These are key moments in the market that volume helps us interpret.
Okay, let's break those down a bit. Buying and selling climaxes, those sound kind of intense.
They can be. Think of it like a tug of war between the buyers and the sellers. A buying climax is when the buyers basically exhaust themselves trying to push the price higher, and then the sellers take over, which could lead to a downtrend.
Gotcha. And a selling climax is the opposite, like when the sellers give up and the buyers take charge.
Precisely. These climaxes often happen on high volume, which is why they're so important to watch. They can signal potential trend reversals.
So volume helps us see who's winning the tug of war. That makes sense. What about these congestion phases? What are those all about?
Think of them as the calm before the storm. They're these periods of sideways price movement where the market is basically just going nowhere. But Coulling points out that these congestion phases often precede big breakouts.
Oh, okay. So, like, how do we know if a breakout is the real deal or if it's just another one of those fake outs?
That's where volume comes in. A breakout on high volume that suggests strong conviction and a higher probability of a genuine move. But a breakout on low volume, be careful. It could be a trap.
So it's all about watching the volume, paying attention to those clues. This is starting to make a lot more sense to me. So we've got these market makers trying to play their game, and we've got volume acting as our decoder ring, revealing their intentions.
Exactly. It's like learning to speak the language of the market.
I like that, the language of the market.
And once you understand that language, you can start to anticipate those big moves before they happen.
Okay, I am definitely intrigued. Let's dive into some more of these volume price analysis concepts. But first, a quick word from our sponsor.
So we're talking effort versus result, climaxes, these congestion phases. It's like we're learning this whole secret code to crack the market.
Right.
But Coulling takes it even further, right?
Sure.
She throws in candlestick patterns.
She combines it all. And candlesticks, they just give you so much more information than those boring old bar charts.
Okay, I'm with you. Candlesticks are cool, but it's not just about, memorizing all the different patterns.
No way. It's about understanding what those patterns tell you about the underlying forces of supply and demand.
Okay.
And that's where volume becomes like the key.
Okay, so, for example, let's say we're looking at a shooting star.
Okay.
That bearish reversal pattern that you often see at the top of an uptrend.
Yeah.
How does volume help us interpret that? Well, Cully makes it really clear that just because you see a shooting star, it doesn't automatically mean the trend is over. Even if it has, above average volume, it's just like a warning.
A warning.
Yeah, like a yellow light. You got to watch for confirmation from the next few candles.
So we're looking for continued weakness in the price and declining volume on those upward moves.
You got it.
Yeah.
And always remember to consider those signals in the context of the bigger picture. What's the overall trend doing? Where are the recent support and resistance levels?
Right.
And most importantly, what is volume telling us about the conviction behind those moves?
Okay, conviction, that's an interesting way to put it. It's like how much the big players are actually putting their money where their mouth is.
Exactly. It's like, are they all in or are they just dipping their toes in the water?
Gotcha.
Volume tells you that.
So it's like we're piecing together all these clues, like in one of those detective shows, right? We're using the price action, the candlestick patterns, and the volume to try and figure out what's really going on.
Perfect analogy. And this is where multiple time frames become super useful.
Okay, so looking at the daily chart, the weekly chart, and maybe even some shorter time frames.
Yeah, exactly. Coulling gives this example of, let's say you see a shooting star on the hourly chart.
Okay.
If you zoom in and look at a faster time frame, like the 15-minute chart, you might see 2 more shooting stars.
Oh, wow. Back to back to back.
Yeah. And those shooting stars might also have a above average volume. That's a much stronger signal than just that single shooting star on the hourly chart.
It's like getting a closer look, like zooming in to see all the details.
Exactly. And as Coulling points out, those faster time frames can reveal key support and resistance levels that you might miss on the slower charts.
That makes sense.
So it's like you're getting this multi-dimensional view of the market.
I like that. Multidimensional. So it's not just about looking at one chart, it's about combining all these different perspectives. This is making volume price analysis sound pretty complex, though.
Well, it's definitely an art, not a science. Software can't do this for you. You got to develop that skill of reading the market's intentions.
Right, right. Okay, so we talked about the shooting stars, like that warning signal at the top. What about the hammer? Isn't that like the opposite?
Yeah, the hammer is like the bullish counterpart to the shooting star.
Okay.
You often see at the bottom of a downtrend,
Mm-hmm.
and it could potentially signal a reversal. Coulling emphasizes that hammers, especially with high or ultra-high volume, can be a really strong signal that the smart money is starting to buy.
Makes sense. They're buying when everyone else is panicking, scooping up those bargains. But how does volume price analysis help us stay in those winning trades?
Ah, that's the million-dollar question. It's one thing to enter a trade, but having the confidence to ride out those inevitable pullbacks, that's where the big profits are made.
Yeah, I've definitely been guilty of selling too early in the past. I get nervous when the price starts to move against me, even a little bit.
We've all been there.
Hmm.
But think about it this way. Let's say you're short in a downtrend and you see a hammer form. If the volume on that hammer is low, it's probably just a temporary blip, and the downtrend will continue.
So I can just hold my position and not worry too much.
Exactly. But if that hammer has high volume and it's followed by other signs of strength, then it might be time to rethink your strategy.
Rethink my strategy, meaning like maybe cover my shorts and prepare for a potential reversal.
Exactly. Volume helps us differentiate between those minor pullbacks and those major trend changes. It's like having this built-in radar system that helps us navigate those choppy market waters.
Okay, that's a helpful way to think about it. So volume is like our guide, telling us when to stay the course and when to adjust our sails. Speaking of potentially confusing patterns, what about those long-legged dojis? You know, those candlesticks that look like a plus sign? I've always found those a bit tricky to interpret.
Yeah, those can be tricky. Culling points out that they often appear during big news releases, and the volume is crucial to figuring them out. If you see a long-legged doji with low volume, it's classic trap move. The insiders are just messing with the price, shaking out those weak hands.
So it's like a head fake in basketball. The market makes this big move, but the volume's weak, telling us that the big players aren't really participating.
Exactly. Culling highlights how this often happens during events like the non-farm payroll release. The market goes crazy, but the volume is weak, telling us that the smart money isn't buying it.
It's like they know something we don't, and they're using that information to their advantage.
Exactly. They're reading the market's intentions, and they're acting accordingly. So the takeaway here is, don't get caught up in the hype. Always watch the volume reaction when news breaks. If the news is truly significant and the price move is genuine, you'll see that confirmed by a surge in volume.
It's all about looking for that confirmation. Don't jump in prematurely. Let the volume be your guide. This is really starting to paint a clearer picture for me. But what about those candles that don't have those long wicks, those shooting stars or hammers? Like those candles where the open and close are basically the same, and there's not much difference between the high and low.
Yeah, those narrow spread candles, right? Most of the time, they're not that interesting.
Okay, but what if they have high volume?
Now that's a different story. A narrow spread candle with high volume, that's definitely something to pay attention to.
It's like an anomaly, like something's not adding up and we need to figure out what's going on.
Precisely. Let's say we see a narrow spread up candle with high volume. What would that tell us?
Well, if the price is barely moving higher, but the volume is high, it suggests that the buyers are putting in a lot of effort, but they're meeting some serious resistance.
Exactly. It could be an early warning sign of weakness.
Weakness, okay. So conversely, a narrow spread down candle with high volume could be a sign of accumulation, even though the price hasn't really moved down yet. It's like the market's winding up for a big move.
You got it. That's the beauty of volume price analysis. It gives us a glimpse into the future, allowing us to anticipate those big moves before they actually happen.
This is starting to make me think about those congestion phases we were talking about earlier. They seem to be a recurring theme here.
They are. Because remember, those congestion phases, those are where the real battles between the buyers and the sellers take place.
And volume is our guide to understanding who's winning those battles.
Coulling compares those phases to a coiled spring.
Ah, I see where you're going with this. The longer that spring is compressed, the more explosive the eventual release will be. And volume is how we measure the tension in that spring.
Exactly, and that's the key question, right? When that breakout finally comes, is it a genuine breakout or is it just a fake out designed to trap traders?
So how do we differentiate between the two?
Culling really emphasizes that those breakouts on low volume, they're often traps. While breakouts with high volume, they signal a real move. She even shows a visual in the book of what a textbook breakout with volume looks like.
Oh, that's helpful.
It's like a light bulb going off.
Okay. Got it. So the key is don't jump in too early. Wait for that confirmation. Let the volume tell you when it's time to act.
Exactly. Culling provides really clear guidelines for identifying and trading breakouts, and she uses real chart examples to illustrate her points.
So it's not just theory. It's practical stuff that we can actually apply in our own trading
Absolutely. And she also emphasizes the importance of using stop-loss orders.
to protect our capital.
Right, exactly. And she talks about having a plan for managing your trades once you're in a winning position.
Okay, so it's not just about entering trades. It's about managing risk and maximizing profits. This is all really starting to come together for me. But how do we apply this to the bigger picture? Like, how do we use volume price analysis to determine if we're in a real trend or just a temporary blip?
That's a great question. Coulling tackles that head-on in her chapter on trend determination using VPA.
And she really challenges some of those traditional trend lines and moving averages that a lot of traders rely on.
Oh, yeah. She argues that they're often lagging indicators. They only confirm the trend after it's already well underway.
So you're basically chasing the trend at that point, not exactly a recipe for success.
Exactly. And that's why she believes that support and resistance levels, combined with volume price analysis, are far more powerful for identifying trends early on.
Okay, so we're not just looking at those lines on a chart, we're looking for clues at those key support and resistance levels.
Think of support and resistance levels like the spawning grounds for trends,
The spawning grounds. Okay, I like that analogy.
just like salmon returning to their birthplace. Volume helps us see when those baby trends are gaining momentum.
Okay, that makes sense. So we've identified these key levels. How do we know when a trend is starting to develop? What should we be looking for?
Remember those congestion phases we talked about? Well, they often lead to those big breakouts and trend reversals.
Ah, right. So we need to pay close attention to what's happening during those periods of consolidation.
Cullen introduces this concept of pivot points as a way to quickly identify those key support and resistance levels within a congestion phase.
Pivot points. Okay, so it's like we're breaking down the market into these smaller, more manageable chunks.
Exactly. But pivot points alone aren't enough. We need to combine them with volume price analysis to get the full picture.
Right. We need to see what the volume is telling us at those pivot points. Is the volume confirming the breakout, or is it warning us of a potential fake out?
Exactly. Culling uses several real-world examples to show how pivot points and volume signals can help us identify trends early on and trade them with confidence.
Okay, so we're talking practical application here, not just theory.
Absolutely. And she also explains how to use multiple time frames to confirm those signals and figure out what the dominant trend is.
So it's all about putting the pieces of the puzzle together, using all the tools at our disposal. I like it.
And here's where things get really exciting. Culling introduces this concept called volume at price, or VAP.
VAP. Now that sounds interesting. What's that all about? So VAP, volume at price. It sounds pretty cool. Tell me more. What's the deal with this VAP thing?
It's like, instead of looking at volume on the time axis like we normally do with those bars at the bottom of the chart,
Right.
we see it on the price axis. So it's like those volume bars, but they're vertical.
Oh, okay. So they're like right alongside the price levels.
Exactly.
Hmm.
And this gives you this whole different perspective on how volume is distributed at different prices.
Okay. I can kind of see how that could be useful, but how does it actually help us make better trades?
Well, think of it like this. Imagine you could see a heat map of a battlefield, right?
Okay.
And you could see where the most intense fighting took place.
Okay. Yeah.
So with VAP, those high-volume nodes on the histogram, they're like those hot spots on the battlefield.
They're showing us where the real action was, where the big players were duking it out.
Exactly. They're showing us where institutions have been accumulating or distributing their shares.
So if we see a high volume node around a certain price level, that's a pretty good sign that that level is going to act as support or resistance in the future.
Exactly. Culling uses this really interesting example of the ES E-mini futures to show how VAP helped identify a major turning point in the market.
Really? Can you walk me through that example?
Sure. So she points out this cluster of high-volume nodes that formed near a previous price peak, right?
Okay.
And this suggested that institutions were likely selling their shares at that level.
So it created this, like, overhead resistance.
Exactly. And when the price went back up to that level again, it just couldn't break through. It eventually reversed and went way down.
It's like having X-ray vision into the market, seeing those hidden clues that most traders miss.
Totally. And VAP isn't just about finding those support and resistance levels. It can also help you avoid those trap moves.
Oh, right.
Culling points out how you can use VAP to spot those low-volume breakouts.
Which often lead to reversals.
Exactly. Because remember, real breakouts usually have a surge in volume.
Yeah.
If the volume is weak, it's a red flag. It's probably a fake out.
It's like the market's trying to trick us, but VAP helps us see through the disguise.
Exactly. And to really drive this all home, Culling ends her book with a bunch of real-world trading examples.
Oh, cool. So we can see how it all works in practice.
Exactly. She covers stocks, indices, forex, commodities. She shows that these principles work across all markets.
That's really helpful. What's like one of those real-world examples that really stands out?
One of the most compelling ones is her analysis of the AUD-USD pair, where she uses volume and candlestick patterns to identify a classic selling climax.
So she's putting it all together, showing how these tools can actually lead to those high probability setups.
Exactly, and that's what it's all about, right? Finding those high probability setups that can give us an edge in the market.
This whole deep dive has been so eye-opening. Volume price analysis, it's a really powerful tool, but it seems like it takes time and practice to really master it.
It definitely does. But Culling, she really emphasizes the importance of patience and discipline. It's not about chasing every little move. It's about waiting for those high probability setups and letting the market come to you.
So start small, be patient, and let the volume be your guide.
Exactly. Culling's book, it's a must-read for any trader who wants to take their trading to the next level.
Yeah. I think if there's one big takeaway from this whole deep dive, it's that volume is the heartbeat of the market.
For sure.
And if we can learn to listen to that heartbeat, to really understand what it's telling us, we can unlock a whole new level of insight into the market.
Absolutely. And that wraps up another deep dive.
We hope you enjoyed it. Be sure to check out Anna Culling's book.
And let us know what aha moments you have.
Until next time.